issuance of an ERC20, whatever you incorporate into it is not really a big deal. Now, how do you remain compliant in the lifetime of such a token?
Hi guys, this episode of Value Tokenized is dedicated to banks, but not only. Our guest for today is Arnaud Salomon, CEO of Pelerin, the project that is building a bank fully on blockchain. And moreover, in December 2018, they held an offering of their tokenized equity, successfully raising over 2 million euros. And they're very open and willing to share their experience with everybody to follow their example. Hi Arnaud, thank you very much for joining us here for the interview at Value Tokenized. It's our pleasure to have you here. And Pelerin is the first bank to be fully built on blockchain. Can you tell us about the idea and the technology behind it?
Yeah, so basically, we want to build a type of libertarian bank where that will be based on three fundamental pillars. It's going to be a Swiss bank based in Geneva, and it's going to be full reserve, marketplace, and tokenized. And I guess the important aspect today is the tokenization aspect, because our ambition is really to bring the entire balance sheet of the bank in the form of tokens onto the blockchain, right? So basically, of course, we start with the liability side. So basically, all the people's deposit, the euro, the dollar, the Swiss franc, the pound, etc., will be tokenized in a wallet that is controlled by the bank. And I guess this is quite important here because we want to have a bank that is usable by pretty much anyone, even your grandmother, right? And so they don't need to really understand that there is blockchain on the back. But when they will be about to make a payment out, they will always have the options to basically choose whether they want to pay on the legacy payment routes, so SWIFT, SEPA, ACH in the US, and then we will redeem on chain the tokens. We will deliver the money to the correspondent bank to pay your beneficiary. Or you could have the options to pay to an address rather than an IBAN, and therefore the token will move from a wallet that is controlled by the bank to a wallet that is controlled by you or your counterparty, right? But this is only the liability side of the balance sheet. Now, on the asset side, this is where it's becoming super interesting because at the end of the day, right, banking assets and most assets are contracts. And therefore, with the usage of smart contracts, what we can do is that we can take this original contract and hash it and incorporate it and link it with a smart contract to automate some of its part of its functions, right? So such as the cash flow management and the ownership structure. And this brings a whole new set of possibilities. If you take the example of a loan, the loan is a contractual agreement, right, that you have with your bank. Every month you pay them back interest. And this is an asset for them. It yields, they make money, but this is also very hard for them to actually have it super liquid, because the bank can sell it to another bank, of course, but you as a customer, you won't change counterparty. You will continue paying back to your bank, right? And this is where it's becoming interesting because now if you think of it, if you pay back to an address rather than an IBAN every month, the cash flow structure is now managed by the smart contract. So it can be owned by bank A on day one, bank B on day two, but it can also be collectively owned by the crowd because it's represented by tokens. And of course, you can go one step further and pile up, smart contracts of smart contracts so that you can recreate mortgage-backed securities, asset-backed securities, and have a product that is fully transparent for anyone to understand, buy, own, and receive cash flow out of it.
And speaking about tokenization, you know a lot about this from practice as well, because in February of this year, you have successfully raised 2 million euro, if I'm not mistaken. And you did it in form of selling tokenized equity. And you had investors from 30 different countries. And can you tell us a little bit more about this process?
So first of all, it was in December last year. It was in the worst period of crypto. Of course, it was in the very deep crypto winter, but yet we managed to successfully close the round. So the biggest challenge here was really to make a buy low security token. And let me explain. So most of the time today, what you see is that those security tokens, the way they are actually structured, is through a private contractual agreement, right? So at the end of the day, you as an investor, you're only protected by the goodwill of the issuer, And as well, you have to read properly the contract, because if they put the little line saying that they may change their mind in 6 months, etc., at the end of the day, you're not that much protected. It's very similar to what you saw in the ICO world, right? So we really wanted to go one step further and give the quality to the token holder to be a shareholder, and therefore being protected by the Swiss law. So the first aspect that we had to actually circumvent was the so-called endorsement, right? So in Switzerland, and I guess in most countries, when you want to transfer a security or a share from party A to party B, you have to do the so-called endorsement, meaning that today it's a written form, right? So it's like you take the share certificate, you go on the back and you sign that the transfer is valid, which of course is not very compatible with the blockchain. So we managed first to actually have a legal opinion here in Switzerland to get rid of that and have the blockchain recognized as the shareholder registry, yeah, and to have this electronic signature to work as well as the handwritten signature. And therefore, now the token, the share is incorporated within the token, and it's totally the same, right? So you own the token equals you own a share. And because we wanted to have the transferability completely free, yeah, we didn't want to have some kind of whitelist whatsoever before that. We decided to structure it in a way that you can own the share, but if you want to get granted all the privileges attached to the fact that you own the share, such as the social rights, voting, and economical rights, dividend. So basically, you have to register with us, right? So you have to get to announce to the company who you are. It's not a formal KYC; it's just a pure declarative names, because we have to write you in the shareholder registry, which is a necessity in Switzerland to maintain.
And you had investors from over 30 countries. And can you tell them more about the regulation that you relied on and to make a public offering?
So what we did was a Swiss, so we are a Swiss company. Our shares are issued in Switzerland, of course, but we wanted to address as many countries as possible. So to do so, we had to, of course, comply with some of the securities law. So we issued a prospectus. We made a proper prospectus for the Swiss prospectus, but we didn't want at the time to file it for the EU, for example, because it would have taken too much time to file it across the entire EU. So we decided to remain below a threshold. So in the EU, for example, you have the so-called 150 investors per state member, yeah, so per country in Europe, that you can address without being qualified as a public offering, right? So this is the threshold. So we had to put a kind of mechanism on the website that counts the amount of people coming onto the website and requesting the documents, the prospectus, the share purchase agreement, and all these things. So we had something that was counting per country, depending on the IP from which you were logging and the information you were entering. And therefore, we would limit the number of investors and even the number of people that could have access to the documentation to 150 per country, yeah, France, Spain, Italy, Germany, etc., etc. And that's pretty much how we did it.
And how can other companies follow your example to fundraise in the same way?
Well, it's actually today we have opened the path, right? So pretty much anyone can just copy paste what we did. So everything is like public, right? So all our documentation is all public. If they all the process, of course, if they respect the same process that we did, they can actually do a Control-C, Control-V and redo it for their own. Of course, there are some little things that needs to be understood. And if they want to have some advices, they can contact us and we will be more than willing to help to organize such things. I mean, today we have an offering. We help actually already different companies to do that. We have, of course, the tech aspects. We have created the so-called bridge protocol in order to help people to issue securities on chain in a compliant way, but that's only the technical part. And then, of course, we can help anyone to, of course, collect money in the form of fiat, because this is the biggest pain point for blockchain companies today. First of all, to open a bank account, yes. But secondly, when you have opened the bank account, to convince the banker to accept thousands of wires from the entire world is also something that is quite hard, right? So we've managed to have all these relations here in Geneva. So if someone wants to do that, they can contact us, and we will more than willing to help them to actually either use our own accounts to do that. We're a financial intermediary, so we can do it on behalf, or we can even help them to open bank accounts here in Geneva depending on the quality of each and every project, we are more than happy to make introductions.
Do I understand it right that you either can already do it now, or you will be able to accept money both in fiat and in cryptocurrency as future, like according to a banking license, or you're still in the progress of obtaining this license?
Yeah. So we are. So of course, our ambition is to become a fully licensed bank. Yeah, this is the roadmap. But in the meantime, we are already a financial intermediary, right? So what it means that in Switzerland, we are allowed to accept deposits, but up to a maximum of 60 days. Mm-hmm. That means that we can help people to collect fiat currencies and cryptos, but cryptos, they can do it with their own wallets. But for the fiat, we can help them doing it on our own accounts. But of course, the sale has to last a maximum of 60 days so that we can collect thousands of wires on one side and deliver the money on the other side at maximum 60 days later. Yeah. So this is already something we can do. We have a banking partner here that trust us for the KYC and AML part. So we do all the documentation for the clients. We prepare the full compliance file that will be then delivered to the client so that his bank will be confident with the fact that he can receive this money and that there is no problem behind it.
Please tell us more about the bridge protocol, because we see a lot of tokenization protocols, also some call it standards, emerging on the market. Can you share what are the peculiarities of bridge protocol? What makes it suitable for securities?
The main idea behind it was the observation that today most of the people, they really focus on the issuance, right? And on the technical side, issuance of an ERC20, whatever you incorporate into it, is not really a big deal. Now, how do you remain compliant in the lifetime of such a token? This was actually solved by many many projects in the form of a whitelist, right? So they say people have to first pass the KYC and then they are into a whitelist so that they can transact, own, and send and receive those tokens. Now, we believe that this is not very elegant because it creates a lot of frictions, and we wanted to have something more refined that is in line with the rules. So, for example, what we developed is a rule engine on one side and a user registry on the other side. And the combination of the two is almost endless. So let me give you a few examples. If you want to tokenize, let's say, euro, Swiss franc, or even dollar, most of the time, you have to comply with rules, because it's not because it's a token that Ben Laden can own one of those. It's not because it's token that it can be used on the darknet. You, at the end of the day, as an issuer, you are actually the custodian of the real money and trusting it within your own bank account. And therefore, you're responsible for that. So you have to apply some kind of restrictions of transferability. And rather than having only a pure waitlist, which is quite cumbersome, we decided to have something that is more refined in the sense that you can send, let's say, 50 euros per transaction without passing any KYC, up to a maximum of 500 per rolling period of 12 months. And that's without any KYC. Then you have to pass the first level of KYC. When you reach the 5K threshold, you need to have a formal KYC with the video onboarding and everything to respect the Swiss rules. And then we need also to be able to trigger some posts on the blockchain when transfers, which is the AML threshold, right? The anti-money laundering that requires us as an institution to document the economical context of such a transaction, the origin of the fund, etc., in order to remain compliant. So it's really linking the on-chain world and the off-chain world. So that is for let's say, the fiat. But now, if you think about securities, all types of securities, they have to respect different rules. In Europe, we have something called MiFID, for example. So you have to, at the onboarding level, you have to make sure that the client understands what he's buying into if the product is subject to MiFID. So we'll have some risk takers, we'll have some risk averse type of person, and depending on the classification, they will be able to own and see those tokens or not. Some tokens will represent an asset that is only for accredited investors, and you need to have flags also in order to restrict on the fly the transferability of such a token, depending on the quality of each and every individual. And this is what the bridge protocol is about, is a way to basically, it's a compliance layer on top of it, the public Ethereum, so that anyone can actually transact, but you have a restriction of transferability. Of course, you need the so-called compliance oracles in order to do so. We are one, of course, on our own network, but it's open for anyone to become one. That's really the beauty of it, is that it's an open source protocol. Anyone can review the code, and anyone can participate and become a regulated member here. The idea is that when you issue your own token, you issue security, you will be able to say, I want to actually bind this contract to this oracle, and this compliance oracle, because I trust them to be compliant with my regional regulations. And therefore, in the future, every time people will want to transact, they will have to pass the KYC with those oracles, one of those, or they trigger the AML with them, etc., etc. So that's really how we structured it. And so, and by the way, by the end of May, we will release a simple page, a really super simple page for anyone to issue their own security tokens. So they will put the name of their company, the amount of shares, the time for the sale, so pre-sale, public sale, etc., some timing, etc. They will plug their Trezor or their ledger onto the computer. They will click on generate, validate on the Trezor, and it will be free for anyone to issue their own security token. So no more like paying 60K to have like some kind of ERC20 to represent securities.
So basically, I think that the future of tokenization is an self-issuance approach.
Yeah, it's all about decentralization, and it's all about empowering people to do it on their own, yet remaining compliant.
And back to Mont Pelerin, I first want to ask you about the story behind the bank's name, because when I actually knew what it represented, I think that it quite suits the idea of decentralization, and it really sounds interesting in this regard. Maybe you can tell us more about this one.
Yeah, sure. The name actually is derived from a small mount that is in between Lausanne and Vevey in Switzerland. It's quite famous for the libertarians in general, because it has seen the birth of a so-called think tank. At that time, it was called a Society for Thinkers. And basically, it was after the Second World War. Some economists and philosophers of their time, I would call them the disruptor of their time, they really wanted to promote liberty in every aspect of people's life, right? So liberty of speech, liberty of press, but also economical liberty, and having to actually spread the word that if you want to have prosperity, you need to have liberty, right? And you need to have a state that has as little impact in the life of its citizens, especially economically, otherwise it would lead to war. And of course, this was funded by Hayek, Ludwig von Mises, Milton Friedman, and all those guys that we all know well. And of course, this is the value that we want to convey. So that's why we named our bank after that.
For in Mont Pelerin, you plan to do a kind of marketplace for different fintechs that will be able to integrate in the entire process. And how will this work on blockchain? Can you explain this more?
Yeah, so basically, yeah, as I told you at the beginning, so the bank is based on three pillars: full reserve, marketplace, and tokenized. So because we intend to have a full reserve type of bank, it means that we will refuse to ourselves the privilege to do on-balance sheet credit, right? And this is how commercial banks usually make money. 90% of their revenue is driven from that. So if we want to make money, that's how we will make money. It's actually through the marketplace. We will be commission-based rather than being credit-based. And because here our ambition is really to say that the bank shouldn't be the sole counterparty for each and every product and services you might want to buy. I mean, today, if you're banked at UBS, the only product you can buy are the UBS product, right? If you are banked at whatever BNP Paribas, well, you can request a loan, but they will only offer you the loan from BNP Paribas, right? So what we want to become is really an aggregator onto the marketplace. It's always open, but we aggregate all the products and services from the market onto a single marketplace for you to choose and consume what fits you best. So you just fill up your criteria, and whatever comes on top is always the best. So of course, we started with the payment systems so that we can have a proper currency exchange in terms of fiat as well on top of crypto, so that people can actually match opposite needs, and that's always the best deal. But also, if you look at it for the loan, for example, which I believe is a great example, you at the end of the day, you do not care if your loan is provided by Bank of America, UBS, or even Lending Club, right? So what really matters to you is that all your criteria are matched and you get the best deal out of it. And that's really the principle of everything we do. Every verticals that we create, every marketplace is really in this sense. And it's always open, right? So at the end of the day, even if you're still unhappy with what you've been proposed, you can create your own deal and let the other members, we can let the crowd subscribe into it, right? And through tokenization, as you said, through the smart contracts, we can automate the cash flow structure, and people actually that would buy into those assets, into these assets, actually will own something that is more liquid than it is today on any crowd lending platform. I mean, today, for example, the lending clubs, somehow, it works quite well. People are happy, right? So they have a better yield that they have at the bank otherwise. They also happen to invest in projects or people they truly believe in. But at the end of the day, they are locked in their investment up until the deal matures. And this is how tokens can solve that, because right after the issuance, you have a secondary market that Pelerin organize, and also it's totally free also to trade it on DEXs, etc. So you have something that is more liquid. So if you want to take, let's say, 2-3 months of yields, yeah, you have invested into it, and then you need your money back because you have another investment to do, you can always cash out on the secondary market. And this is really the principle of everything we do.
I'll probably ask, I think that this will be our last question for today. But going back to the banking license that you're in process of obtaining, how does the process go, and what are the obstacles you're seeing on your way, being a very innovative project, obviously? Please tell us more about that.
Yeah, I mean, at the end of the day, a banking license, it's about it's about people, right? So they want the regulator is absolutely focused on who are the people, who are the key people. Do they have the understanding, the knowledge, the career as well? That's the main thing, right? I mean, and then of course, especially in Switzerland, the regulator will not grant a banking license to any company if they believe that they will not reach profitability within 3 years. This is super important for them, because it will be a huge reputational risk to give a banking license to a company that would basically go bankrupt after 3 years. That would be like quite bad in terms of reputation. So we had to actually explain that, right? So we had to actually prove that we can make money in another way by running a commercial bank. We don't have to actually do on balance sheet credits to make money. We can actually make money as well. We can be profitable by running those marketplaces. So that was really the first point. Now, of course, the second aspect is that you have to retrofit everything you do into the existing compliance boxes, the regulatory boxes, right? So you shouldn't go to the regulator and say, here is what I do, please qualify me. No, you have to actually put yourself in their shoes and look at exactly what are the regulatory boxes and make sure that everything is able to retrofit back into it. So that's why we started to build this bridge protocol, is in order to actually code with the rule engine all the transferability restrictions that today banks apply in the off-chain world. And we had to actually replicate that onto the on-chain world. So that's the first aspect. We had also to, and that's something that of course is not super appealing for the Bitcoin bugs, etc. Because I'm in love with Bitcoin, that's not the thing. But we have, when you talk about fiat currencies, for example, when you talk about securities, you have to retrofit rules. So that's why we had to have as well a golden key that we call a judge key. So that's a judge, if he has the mandate, he can come and he can lift the Swiss banking secrecy to seize assets on chain. And that's because at the end of the day, we as a bank, we only act as a custodian bank, right? So we entrust the real assets, and what is on chain is only a representation of what is entrusted within the bank. So that is super important to actually to prove to the regulator that everything works as it used to work in the off-chain world. So you have to actually prove that, because no rules are going to be made, especially for you, because you're a new innovative project, right? So that's the main aspect. And that's also why, in terms of crypto, in Switzerland at least, it's not that easy to offer Bitcoin and Ether to the crowd, to the mass. It's very hard, actually, simply because you have to respect the compliance rule. You have to actually document the origin of the fund as a bank, right? You have to actually conduct this whole due diligence. And when it comes to Bitcoin and Ether, you can think of chain analysis, you can think of things like that. But we all know that it's quite bullshit. At the end of the day, you deposit your coin on an exchange and you withdraw it. It's not the same coin anymore. So it's hard actually to document it in a systematic way. Of course, you can take 3 weeks to make a proper assessment, discuss with the client, and try to prove his story is right and he's not lying to you. But this would be quite cost inefficient, and for a banking institution, that's quite hard to actually bring that. So it makes sense if the client comes with millions, yeah, in the form of private banking, etc. But if he comes with only 50K, the cost of onboarding such a customer versus how much money you can make on such a customer is quite disproportionate. So that's also why we're trying to work now on a proper way to actually systematically have this compliance done, and that would be acceptable for the Swiss regulator. But we believe this is something that will come in phase 2. We hope we can bring it into phase 1, but we don't want to actually postpone the banking license because of that. So on the first stage, we really want to be a bank on blockchain, not a crypto bank. And then on second stage, we'll add crypto. But maybe we will make it happen before that.
Yeah, good luck with that, and thank you very much for being with us at Value Tokenized and sharing what you do. It is extremely interesting, and we will be following closely.
Thank you very much. Thank you for having me. It was a great pleasure to meet you, actually.
This was Value Tokenized. Thank you for watching. If you have any questions to our today's guest, feel free to leave them in comments below or contact us via mail directly. And of course, don't forget to like and subscribe to us on YouTube and Twitter.